Testing mic. Testing microphone. Testing mic. Testing mic. Can everyone hear me? Can everyone hear me? Can everyone hear me? Hello? Anyone there? Testing.
Privacy camera.
Okay,
Access camera allows you to access your camera from device menu settings. Privacy. Oh, they obviously go into privacy.
hello, can anyone hear me? Hello?
Hello.
Okay, cool. Got it sorted. Okay, guys, let's give it just 1 minute or so for everyone to join.
You like send messages.
Guys, just to check here, I'm trying to record this so that people that aren't able to be here uh, can see it later. What are you guys seeing right now?
I can see your trading view.
Trading view? Okay, perfect. Still have some people joining here. Okay, guys, bear with me because this is the first time I'm doing this, so I'll try to make the best of it. And I'm not one of the most organized people, so I'm just going to wing it. Um, and I feel like that's where I do best is when I'm kind of winging things. So bear with me. Still got some people joining. If you guys have any questions or anything, feel free to type it in the chat. So the way this is going to work is I'm kind of going to explain things start to finish, and if every once in a while I'll stop and see if anyone has any questions. Um, Obviously, in a room with 50 plus people, it's going to be a little difficult to do a voice Q&A. That'll typically be best, during our uh, during the regular trading session. It seems there's less people, and we can, go through any voice Q&A. But if you do have any questions, just type it in the chat, and I'll answer too. Okay, so if I stop and don't say anything for a little bit, it's because I'm looking up something that was priorly discussed in one of the channels, and I'm going to try to explain it and run through it. So bear with me. What I the the focus on today for our webinar is to go over some of the entry strategies that I've been discussing for a while now. Um, we send out the alerts in the penny stock palace and in the options alerts. Um, but a lot of people have difficulty in a lot of people have difficulty entering the actual trade. Um, and then they're like, "Oh shit, I'm down. What do I do now? Do I close all of my positions? Do I do I hold it and risk losing more?" And I'm going to try to go over some of the strategies that I use to to enter a trade with a rule based system. And you don't. So I'm just kind of winging this because there's still people joining. I'll get to the essence of it in a little bit as soon as everyone is kind of joined. I don't want anyone to miss anything. So our jobs as traders or investors in the market is essentially to preserve our capital. We don't want to risk our own money. We don't want to lose our own money. And the only way for us to do that is to take a position and essentially protect it in a way that we are going to risk something when we enter a position, but um, we want to risk the least amount possible for the least amount of time possible. And with that, a stop loss is important. Um, so give it just a few more minutes. There's still people coming in. Um, there was a scheduled time, but you know how it is.
Maybe some people in the wrong room. That's what happened with me.
I just posted the link again, so
Yeah, that's how I ended up here.
and I mean, if I know there's a lot of people in the room right now, if if for whatever reason you guys feel that there's too many people and want to join the next session because there might be less people, feel free to. It's going to be open for everyone. Um, so it looks like we have pretty much everyone. I feel like the entries have stopped. Okay, let's get started. So, okay, essentially, as traders, you want to be able to limit your losses, and I'm going to go over a few entry strategies that I use and that I've posted in the past in the penny stock palace channel because it's usually the one that a lot of people use. I feel a lot of people also like options, and this strategy is valid for essentially anyone that wants to trade whatever it is. It doesn't matter. You want to trade forex, you want to trade crypto, you want to trade stocks. These strategies that I'm going to explain, you can trade essentially anything you want with it. I'm going to attempt to do some real time trading here on Bitcoin and crypto because well, it's the only thing open. Um, now, I don't want people to feel limited for not using the indicator. So I don't have it on here. Actually, I have it on here, but I'm going to take it off. This is going to be essentially just price action trading. This is going to be accessible for everyone. Anyone that wants to take advantage of this lesson and use it in their trading, they can. They don't need to purchase any extra bells and whistles to trade. Obviously, if you like the indicator, if you use the indicator and it helps you, anything that you do that can benefit your trading is obviously helpful. So the first thing I'm going to talk about is um, just a basic, just a basic chart setup. So I use the 50-day and the 200-day moving average. I use the EMA, but you can use the moving average. It doesn't really matter. It's kind of irrelevant. What you're trying to do with the moving average is just get a trend, right? So when the 50-day is above, and the blue line is the 50-day, let me flip this on. The blue line is the 50-day, and the blue line is the 50-day, and the orange line is the 200-day moving average. And when the 50-day is above the 200-day, we're in an uptrend. And let me see if I can find something here. Let's see, Jimmy. Any ideas of anything that's on a downtrend? So here, 50-day is underneath the 200-day. So essentially, we're in a downtrend. This is known as here's, oops, I just switched this. The crossover is what's commonly known as a death cross. So when the 50-day is under the 200-day, or when the 50-day crosses the 200-day coming down, it's known as a death cross. So in this case here, obviously it would consider the daily chart, but just to make it simple, this here is known as a death cross. It means the trend is starting to come down. And when we are in an uptrend, or when the 50-day crosses the 200-day, it's known as a golden cross. So a change, it's a shift from a downtrend to an uptrend. Okay, and looking at the daily chart, obviously this might not help you too much as short-term traders, but if you were to buy here on this golden cross, you would have bought somewhere around here. Okay, so you would have been up, up to $56. Um, Same thing here. If you would have bought here on the golden cross, um, you would have eventually been up. This is in an uptrend. Okay, so what I want to say with this is when the 50-day is above the 200-day, you're in an uptrend, right? So you only want to you want to give more weight to the purchase signals than you want to the sell signals, right? So you want to be able to always be trading with the trend. So when it's trending up, you want to be buying. When it's trending down, you want to be selling short or not buying at all. So just so you can see what I'm talking about here. So I'm just picking Cloudera as an example. From this moment on, we were in uptrend. So it doesn't matter what this does. It goes up, it goes down. It's going to happen. But you want to be looking for uh, buy signals. You want to be looking for buy entries here. Okay. Now, just for the hell of it, let's switch on the indicator here. I'm going to do it on very aggressive. Okay. I have the sell signals turned off. So if you have this on here, very sell. Okay. If you were to see this chart like this, right? Here's your golden cross. So if you were to look at this chart just from this moment here on, you're in a bullish trend, so you would be looking for the buy signals. Now, you tell me, okay, so what are the sell signals for? Okay, sell signals on an uptrend, they can be used as a take profit, for example. It doesn't mean that you're supposed to short it here. Sorry, I'm reading through the chat. I'm reading through the chat here. Uh, so okay, in an uptrend, you're looking for buy signals, right? So if you're using the indicator, let's say that you're in an uptrend. Okay, I don't want to see sell signals. Just come to the indicator and take them off. So let's kind of look at what would happen if you had taken the buy signals here after this was in a true uptrend, right? So you would have bought here, you would have bought around here, you would have bought around here, you would have bought around here, 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 here. Okay. Through this period here, now you would have been in profit, right? And this is something that I feel like people don't understand too much. If you had bought here, you would have been in profit, right? 20%. And I'm just eyeballing this. 22%, 17%. I don't know. Here, just for the hell of it, you would have doubled your money. Or here, made 68%. Here, made 35%. Here, made 23%. So I'm showing you this just so you understand that when we're in an uptrend, we need to be buying. The buy signals are going to work much better in an uptrend. If you were to take the, okay, now let's remove this. And sorry for using the indicator, but I feel it's just easier to show you here. So if you had taken the sell signals in an uptrend, so you would have sold here, okay, you would have made, 10% here. Here, you would have probably made 1 or 2%, maybe, if you didn't lose. Here, you would have, lost because you would have been all the way up here unless you held it, which you shouldn't have. Here, you would have lost. Here, you would have caught something. Here, you would have just totally lost. Here, you would have totally lost. Both of these, same thing. You would have totally lost. Okay, so I think this proves that when we're in an uptrend, we need to find, and this is the basic of any strategy, right? When we're in an uptrend, we need to be buying. When we're in a downtrend, we need to be selling short, buying puts, whatever it is. So, okay, now I'm going to shut off the indicator just because that's irrelevant for what we're going to be talking about today. Okay, so okay, this is a daily chart. Obviously, if you're trading on a daily chart, this is going to be a longer term trade, right? So if you would have bought somewhere around here, or let's say, I don't know, anywhere around here, you would have been in this trade, you know, for a good amount of months even, and you would have still been on the uptrend. Most people, I feel, in Stock Whispers, they they tend to be a little bit shorter term. However, the same rules apply. It doesn't matter if you're trading on it doesn't matter if you're trading on a 5 minute chart or a 1 hour chart or a 2 hour chart. The strategy is still going to apply. So let's flip over to Bitcoin here, and you can clearly see we're on an uptrend on the daily. And this is also something important. You want to always understand what the trend is on the daily chart, right? Um, so even if you're trading on a 5 minute chart or a 15 minute chart, you still want to know, you know, are we in an uptrend on the daily chart or are we in a downtrend? Let's flip over to a 5 minute here. Okay, so we're on an uptrend, and this is just a basic, you know, we're on an uptrend on the daily chart. You want to be taking purchase signals. So you could have even taken this golden cross here or this bullish crossover here on the 5 minute chart, right? You would have ignored this signal, this sell signal here as a moving average crossover, and you would have probably taken it here if you wanted to buy this cross. I do not recommend buying these crossovers. Moving average crossovers, they do not work over time. So now is when we're going to dive into the two strategies. Actually, let me confirm if they are two or three. Um, there's three strategies that I talked about. One of them was the bull flags, the pennants. The other was an inside day breakout candle strategy, and the other one was a. Honestly, I don't know the name of the pattern. um, I've been using it for years, but I can't seem to find an accurate name for it online. Maybe it doesn't have a pattern. It's just something that seems to work. Um, I don't know. However, I'm here to explain it to you. And all these strategies, it's important to understand that they are all tools. They are tools for you to use when trading. So if you're a plumber, um, you know, there's multiple types of jobs that you do. Um, each job requires its own tool. Um, and um, when you get to a job, I see you guys saying bullish engulfing, and I heard you guys say bullish engulfing the other day. It's not a bullish engulfing candle, okay? A bullish engulfing candle, you need to make the second candle needs to make a new low, and it needs to fully engulf. Um, it needs to fully engulf the candle number one. So here, I'm going to do this to the best of my knowledge. If this is a candle, okay, this is a bullish engulfing, right? If this is a down candle, okay, this one here is an up candle. This is a bullish engulfing, right? So this second candle fully engulfs this, or fully, it, it fully engulfs the first candle. Okay, sorry, I'm trying to find the word, a better word than engulf, but that's the technical term for it. So the second candle fully engulfs the first one. This is a bullish engulfing. The reverse. So if this was a green candle and this one was a red candle, that's a bearish engulfing. And those candles seem to show up a lot in trading, so I really wouldn't give them too much weight. But you know, it's a tool. Okay, back to the plumber. So when the plumber comes to a house and he's about to do the job, he needs to figure out what tools he needs. Be it a wrench, a screwdriver, a hammer, whatever he needs. And that's also your job as a trader, right? So what we try to do is give you guys very good strategies and things that you can use in your trading, or tools that will help you. Is someone drawing on my board? I didn't even know that was possible, but I see someone drawing on it. So can you delete that? Thank you. So one of the strategies that we were talking about here was a bull flag. So here is the current job. Once this bull cross happens, right, and we know we are in an uptrend, then it's your job to find an entry to the trade. Now, I'm going to tell you when this gets here, you're going to get an alert that says, oh, buy Bitcoin. Or, you know, um, buy Bitcoin, or you're going to get an alert for an option, or you're going to get a ticker in the penny stock. Okay? So your job is now to find your entry, right? So a lot of people, what they do is they just go straight out and they buy. They go straight out and they buy right here. They get the alert, right? And they buy right here. Then they spend the next 4 hours complaining, oh, why is my option going down? Oh, why is I don't know, why am I losing? I just bought an option and it's gone down 10%. What do I do? Do I sell? Okay, we're alerting to a buy here. It does not mean, if we had alerted to the buy here, it would have been good, right? Straight up from here, perfect, no complaints. If we alerted here, then you're going to go through this period. Now, we don't see any of this we just alerted here, right? So we don't see the future. We can't see the future. Nobody can see the future. All we can see is this right here. We had a bullish cross. We just broke over these highs. You got a little alert here. Let's just say you did, for simplistic cases. Okay, what's your job right now? Okay, now you have a job. Now you're the plumber and you have a job. You have to figure out, what tool you're going to use to enter the trade, right? So if you don't have time, you can just very easily go ahead and buy this. Okay, trust us. That's what they say. And you buy here and price just goes sideways for a bit, eventually goes down a little bit. Here is where you start to get worried. You're like, oh shit, you know, Stock Whispers just screwed me over. Okay. Then it kind of reverses here. It bounces off the 50-day, kind of reverses, and then boom, it goes up. Okay. So you got the alert here. Now let's talk about a flag pattern. I can't show you the drawings, but they're pinned to the channels. You have a flag right here, right? This is what you want to look for. So you got the alert, right? Your job now is to watch. That's the alert. Your job now is to watch. Over 50% of, or over what 70%, 80% of trading is literally watching charts. So your job here is to, whoever's drawing on my board, can you remove it, please? Your job here is to watch it, right? And you watched it and you saw, you know, this little pattern starting to form, right? Boom. That's where you got the breakout, right? So here is where you want to buy. You got the alert here. Okay, guys, can you delete whatever it is? Can you guys delete whatever it is you're writing on my board? Perfect. So here, you got this bull flag, you got the alert here, the 50, the trend is up, you got this bull flag, here is where you're going to enter. For one, the trend is up. Number two, you got a bull flag, which is a little continue. And I'm not arguing if this is a flag or a pennant or a wedge or whatever it is. It's a bullish continuation pattern. The when it breaks out is when you should buy. Okay, you got the alert here. You saw the pattern start to form. You bought, and automatically you got that move up because not just you, but all of the other traders in the world are also looking at this pattern. And what happens is when it breaks out, all of the traders start buying. The pigs buy here. Okay? Bulls make money, bears make money, pigs get slaughtered. This here is the pig zone because you're buying here in this middle and you have no idea if this is going to break up. You have no idea if this is going to happen or if this is going to happen. Okay? While you're in this, whatever you do is just guessing. It's just guesswork. Okay? So you need to be able to, you know, identify these patterns and see them in real time for you to find your entry. This here is your entry. Not at the alert. Because here, when I alert this, or when we alert this, or when, our system gives us the signal, this option is going to be worth $100. And when we get here, the same option is going to be worth 85. Okay. So this time here that goes by where this is going sideways, your option is losing money. We alert here. A lot goes into options pricing. Oh, okay. This is a good question. I'm going to stop actually to answer this one, Henry Harley. So I cannot see this. Okay, I cannot see this alert and watch it for 4 hours before giving you a buy signal, right? And that's not what we're here for. We're not here to track individual stocks to to pinpoint the exact low that you're supposed to buy. No one is going to do that because I'm going to spend 4 hours of my day, 5 hours of my day just looking at this pattern and waiting for it to happen or not. So if I come in the morning and I see this alert and all of a sudden, I have to wait till the afternoon and this alert just happens to break down, okay, you just got no alerts for the day. I would rather tell you, okay, here is the alert. Okay, we're betting on a direction. We're betting that this is going to go up, and we're right because, it did go up, but we're not here to pinpoint the exact lows. When we present results, we show you the amount it was trading at right here. We don't give you the amount it was trading at down here. So our metrics are measured from this moment on. And you can see by the results that they're pretty good, even doing that. Now, this is also, a little bit more for day traders. Obviously, if you don't have time for all this, you want to know just when to buy and when to sell. We send out the alert for this system that was detected. You can buy it whenever you want, if you want. This is all for educational purposes only. And if you bought it here, then you'll still be up. But it's not our job to track this individual stock or ticker and see when the exact low and if a certain pattern is going to show up. Yes, it's a 5-minute pattern, a 5-minute chart. So this is just one reason, and also because we did not know that this was going to happen. When we provided the alert, we were right here, right? So we did not know that, we didn't know that, a bullish continuation pattern was going to show up right here. This alert could have been right there. And then if I had waited all day to try to find this $85 buy point, then I would have missed the whole move up. Okay, so just to explain that, this is an entry strategy. So what I'm talking about here is trying to pinpoint better entries. If you have time for this, great. If you don't have time for it, then it's, you can also, this is a 5-minute chart, but we can also go to a 1-hour chart. You can look at things at the end of the day on a 4-hour chart, and you find these patterns, right? So
Esta nueva base feita agora pongo. Sí.
can you mute your mic, please? Okay, so yes. So here we are on a 4-hour chart, right? So what do we see here? I'm just drawing some lines here, okay? Nothing special, just uniting the tops. Okay. See a little triangle, a little bullish continuation. It broke out, came down, stopped up. Okay. Right here, you have a little flaggish wedges kind of thing. A little wedge broke up, continued to move up, came down, tested. Okay. Here you have another. I'm gonna delete this. Just leave it. Here you have another little bull flag. Okay. So now you ask me, okay, great. Now I see all this. Now I just got home on Friday night. I see all this, and okay, I still don't know where to enter a trade. Okay, so you enter the trade on the breakout of the pattern, right? So you would enter that candle. 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 Okay, does this look easy enough? And all of your buy points would have worked out well, right? So, I mean, it's actually just it's as simple as this. I mean, from February till now, you got four buy points on Bitcoin 4-hour chart, right? So now you say, okay, now where do I put my stop loss? Right below the pattern. That's your stop loss. Okay? Right below the pattern. That's your stop loss. You could have even adjusted it to the breakout right here. Okay, it broke out there. Where am I going to put my stop loss? Right below the pattern. Or right below that candle if you want. Okay? Broke out here. Where do I put my stop loss? Right there. Or right below the pattern. Whatever you want. So you see, this is literally this easy, right? What we do in Stock Whispers is we provide you with stocks that are doing this, right? They are trending. They are already in a bullish pattern. They're already, moving. If you get a stock like BA, see something here. Oh, that's probably a bad one. Yeah. Let's see. Solo might be good. Okay. Solo. If you get a stock like Solo, right, that's in this sideways, not going anywhere, pattern, you are not going to get an alert on this stock. Okay? What we try to find are stocks that are in this period here. They're in a period where they're moving. Now, obviously, we don't know that it's going to go sideways. So, you might even get a put signal around here. So, but then, it just kind of goes sideways and goes against you because you can't really tell the future. It was trending, but automatically, it started to go sideways. Okay. So any stock that you pick, let's talk Riot. Okay. Everyone's looking at Riot. We're on the daily chart. We're on the daily chart here. There's no, you don't have to trade the daily chart. Okay, trend is up. Everyone knows that. Okay, let's go to the 1 hour. Let's find our entry on the 1 hour, right? Okay, so where do I get in? Let's look for the triangles. Okay, let's look for the flags. Let's look for the, patterns. Boom, entry right here. Boom, entry right there. What else? Okay, 1 hour isn't working with us too well, right? We only got 2 entries. Price moved a lot from 37 to 59, so it's moving pretty quickly. Okay, let's reduce this to a 15-minute chart. Let's reduce it to a 5-minute chart. You need to trade the time frame does not matter. You need to trade the time frame that you're more comfortable trading. Okay, so let's just say, this is what we have here, right? Went up, now it's coming down. Okay, now you're watching it. You haven't taken a position yet, you're watching it. Oh, you see that? You see that there? Okay, so here is where you start uniting lines. Right? Boom. Oh, this one didn't work out too well. It already opened up down there. Okay, so you missed the entry. You keep going. Oh. Okay, it's pulling back now. Still pulling back. Maybe here you start drawing some lines. And these lines are adjustable, just so you know. Maybe you adjust this here. Boom. Here you go. Okay, so you can't tell the future. So all these lines that you're drawing here, they're adjustable, right? And keep in mind, all I'm talking about here is the triangles, right? If this is a strategy that does not work for you, you don't have time for it, you don't, whatever it is, you don't want to do it, then it's up to you to choose this tool or not. So as you're drawing lines on the chart, all of these lines are dynamic. They're adjustable, right? Because you can't tell the future. When you were right here, you didn't know what was going to happen. So you just kept kind of adjusting, your lines based on what you're seeing. You know that this typically finds support here at the 50-day moving average, right? So here was the breakout. You got a retest and boom. Okay. So at this point, this is what happened. Price came up, bounced there, boom, boom, boom. It broke up, it came down and retested, and then it went up to make a new high. Okay. So none of these patterns are 100% reliable, right? So I don't know what's going to happen here in the future, but your entry could have been one of 2 things at this point. You could have entered here on the breakout, right? Or you could have entered here when it broke out, it came down and retested, and then it moved up for a new high. And then, you know, price does its thing. This move here is normal. Just because this happened doesn't mean that it's going to move up in a straight line. It means that you found your entry, right? Okay, so if you found your entry here, right, where do you put your stop loss, right? So you found your entry here on the break, right? Where would you put your stop loss? Down below, you know, wherever you found your entry. You could have put it here. You could have put it down here below this swing low, okay? It broke up here, right? It broke up that high. You bought it right there. Where do you put your stop loss? Right here, right? These are your stop losses, okay? And so here, you're risking 8%. That might be a little too much for you. You put your stop loss right there, right below the candle where you entered, okay? You entered there, your stop loss is here. That's a better entry. You only have a 4% stop loss, right? So the point of the stop loss is to use a stop loss where it invalidates the reason that you entered, a reason that you entered the trade. Wherever your reason for entering the trade is no longer valid, then that's where you put your stop loss. So if I got in here on the break of this high because it came down and tested this area and moved back up, then if it breaks down below this area, my reason for getting in the trade is invalidated and I should be stopped out. So you can see here that any of these two entries would have worked. And I have no idea of knowing what's going to happen in the future, right? But my stop loss, where my reason for entering, protects me. So as you can see, price moved up, then it pulled back once again, but my stop loss was never hit, and it eventually moved up again. Okay, now I'm in the trade through all this. I can, manage this in multiple different ways. I can, put my stop loss at my entry point. Okay, I'm safe. Now I can do this. Okay, now this went up. Okay, it did here. Now it did here another triangle, right? You got another triangle here this next day. Perfect. This is also a continuation triangle. Where's my stop loss? Okay, now I'm going to move my stop loss to underneath the triangle. Okay, now we're up here. It came down and bounced. It went up. It's still going up. Okay, boom. Uh-oh. You're like, here's where you go. Uh-oh. So if you track this movement, you saw another continuation triangle here, right? Where we broke up. We moved up. Continuation triangle. We moved up again. Boom. Where's your stop loss? Underneath the continuation triangle. Boom. Whatever happened, you would have been stopped out right here. Okay. So just looking at this would have been, these two entries here would have been good for about a 50% move. Now you ask me, oh, when do I sell? When do I know how to sell? Nobody knows. So you bought in right here. Nobody can tell you the future. So you sell when you're at a decent profit, or you find these technical patterns and trail your stop loss underneath them, right? and then when you let price in the market take you out, right? Or you just simply um, sell out, you know, as you go up. You could have sold out. Okay, it hit here, it came down, it went up, and it hit here again. Okay, it's fine. You took some profit here. Next day, it came in, it moved up again. You know, it came down. Maybe you took some profit here because it was a prior high. Maybe you took some profit here. You know, you took two times profit already, and then you eventually got stopped out by the market when it came down. Okay, so, and I'm just picking random stocks here, just because this is valid on any stock, any ticker. It doesn't matter any time frame. If you're trading a 1 hour chart, it's going to leave you in the trade much longer. If you're trading a 5 minute, a 15 minute, a 1 minute chart, it's going to leave you in the trade for a lot less time, because you're going to have a lot more crossovers. Your stop losses are going to be, um, you know, much closer. Okay. So, I want to do a pause here and let you guys, uh, please organize yourselves. And if you have any questions, unmute your mic and let's go over them.
One of the things I've always been curious about is, drawing my wedges or my pendants. I'm never quite sure exactly, where the top or the bottom starting point in it. It looks like you're just kind of, you know, getting a best effort close to it. It doesn't look like you're being you're too concerned about being exact. Am I right?
Yeah, that's exactly correct. The market is not a science, it's an art. So if I look at this and I see a wedge, and you see a circle, that's that's up to you. You know, you have to look at this and, see, whatever it is you see. I see a wedge here, you know, a flat top, a flat. This is what is this called? Uh, a flat top. I think it's a wedge or a triangle. I just call them all triangles just for simplicity. I see this, right? Or, even this. What do you see? Right? So that's the question. I need to see something that helps me analyze the chart and helps me find the direction. Um, with that said, there's no right way or wrong way to do it. I see this, right? You can come in and you can argue this. Oh, I see a double top. you know, and we're both looking at the same chart. So this can be a double top and it can be a triangle. You know, it can be another guy, might come in. Oops. Another guy might come in and say, "Oh, hell no, I see a head and shoulders pattern." Okay, it's kind of weird, but here's the head and it's now making the shoulder, right? And he's going to wait for this break to go short, and we're all seeing different things, and we're all looking at the same chart on the same time frame. You just need to kind of look at it and see what you see in a way that helps you analyze what's going on. Any more questions? Anyone?
Hi, Mythos. First of all, thanks very much for taking the time to go through all this today.
No
I was just
problem.
wondering, when trading these stocks, especially with the indicator, how do you choose which stocks to kind of day trade? do you kind of go on volume or pre-market rises? How do you find them in the first place?
Okay, so we in Whispers, we find them. We purchase expensive subscriptions to market data, and we kind of connect all of that into a back office system, and then it matches a whole bunch of criteria, and it spits out a ticker, and that's how we find um, you know the stocks that are profitable setups, and you know um, something alertable, something that's worth alerting. Um, as someone as just a regular market participant that you don't have access to, all of these subscriptions and all of that, I would say to just look for pre-market movers. Maybe go on Finviz or Yahoo and look for what's moving, and then you just have to pull up charts on those and see where the volume is at to see what's trading. But that's not going to tell you if something like this is going to happen, right? I mean, that's not going to tell you if this up move is going to work out. That's only going to tell you where the volume is at. I don't even use volume. I don't use volume. I don't, volume confuses me. Because volume, for every buyer, there's a seller. For every seller, there's a buyer. And automatically you have a whole lot of volume. That doesn't help me any. Um, I don't use VWAPs. I don't use anything. I barely use moving averages. I just use price. Price is king. All the indicators that you use, they all lag. So first price does its thing, and then the indicator reacts to what price is doing. Um, so RSIs, MACDs, stochastics, they'll tell you if you're overbought or oversold, but that's pretty much it. And we all know that things can they can go overbought for years and years and years and still keep going up. Um, I pretty much just trade price. If I'm looking at this, and this is something we're going to go over next. I just look at what price is doing, and I follow it. I mean, if price goes up, I go up. If price goes down, I go down. Um, I win some, I lose some. Hopefully, at the end of the day, I win more than I lose. Um, one thing that you need to be comfortable with is losing. You're not going to win them all, and that's where the stop losses come in, and that's where cutting your risk. Um, if you look for strong profitable patterns, then you're going to end up getting one right, and it's going to pay for three or four that you get wrong. And that's exactly what trading is. It's it's doing taking trades and getting two or three of them wrong, but then getting one right and paying for 10 that you get wrong.
So you said the 50 PMA crossing over the 200 is not a reliable buy signal, right?
It is if it's trending. I mean, hold on, let me show you. Let me show you what I mean. If you catch a if you catch something like this, sideways market, right? So a market only trends, a stock only trends like 30% of the time. Um, it's going sideways 70% of the time. So if you had taken this buy here, right, you would have bought it here, then you would have had to sell it down here, right? So you lost here, then you bought again here, and then you sold again here. So if you get a long period in the market like this, you're down 13% already, or 10 plus 5. Um, Obviously, if you do this consistently over time, you know, maybe it works out, maybe it doesn't. It's a simple moving average crossover strategy. A lot of people still use it, but you can't rely on it too much as as a signal. You have to rely on it as a direction, and then go in and then go in and how do you say, find your entry, right? So if let's say you're here, right, on the 15-minute chart, okay, it crossed over here. You still have to find your entry here. You know, where's your entry? It's not like you're going to buy here just because it crossed over. So when it comes down here, you know, you're looking for a bull flag, you're looking for something to bring you in. Okay, automatically here, you get a flag, right? Now, this is in a bull mode, so you're expecting this to break up, but shit out of luck, it broke down, so you didn't take the trade. You know, then automatically here you get the bearish crossover, and you didn't take the trade because you didn't find your entry, right? I mean, you could have alleged, okay, I want to buy at the 50-day. So what do you do then? You go, you got the bullish crossover, hit the 50-day, you got a little bullish engulfing here. Oops. You bought it there, okay? And now you're in the trade. You're going to write it up from here all the way to there. Maybe take some profits, maybe not. Um, then here, then you get stopped out there if you're trading correctly. Probably there. So if you had done this, yeah, I mean, you would have been somewhat profitable. Um,
So
so
I have.
I'm
Sorry,
just
go ahead.
saying, don't use the crossover itself as an entry signal. You still have to go and look at the chart and see and find your entry, right?
So I have two more questions. One was on that flag right there that you just showed.
Yeah.
Um, can you take a breakdown of the bull flag as a signal to buy a put or sell it short, or would you need a bear flag? I mean, obviously here it worked, but there's more times than not that that won't work.
Um, it will
So
work more times than not if you're in a bear trend.
okay,
Um, the problem here is that you're in an uptrend, right? So if you're in an uptrend, because the 50-day is over the 200-day, you're in an uptrend, right? You're in an up
mm-hmm.
from this period to this period. So you should be looking for long entry. If you get a short entry, it's just like me coming in and turning on the indicator, you know. Um, this one here,
Okay, so that
look, this one here, it would not have worked out well. This one here, it would have not worked out well. This one here would have not worked out well. This one here would have worked out well, but you see, you lose 3 to get 1.
got you. And then regarding the trend, you said most of the time it's in a sideways trend. So um, like obviously you can go back and look when the EMA crosses over and see the long uptrend, but at the time, you can't see the future, so you can't see that. So that's what I guess that answers my question about the trend.
Well,
When it's
if
above
all you can
above the 50
see, if all you
EMA,
can see is this here, right? Then you know it just crossed, right?
yeah,
Okay, so it just crossed. Now you're looking for your entry. What's your entry? What are you looking for?
you'd be looking for a break of that flag.
Well, you don't know the flag. You don't know where the flag is. You haven't gotten there yet.
No, that's what I'm saying. You would keep watching it and look for the break of that flag.
That flag or whatever other tool you use.
Triangle, yeah, whatever.
Okay. We haven't found it yet, right? We're still watching at this point. So you could have used the 50-day as a buy point, right? So you could have bought here and actually been in the trade for this quick scalp. But you still haven't, and this would have been your entry point. So your stop loss would have been right here, right? Because if you use the logic of buying at the 50-day as an entry point, then you would have bought here at the close of this candle because that's when the bullish engulf confirmed, and your stop loss would have been right below it. So you would have had a I don't know, 2% stop loss about that. And probably the better way to show this would be here. So you would have taken a long position right there. Your stop loss would have been here. Okay. Now, you see this risk reward ratio? See how it says 2.55? If I adjust this here, it changes. That means that I'm risking I'm making 3 parts for my 1 part stop loss. So I'm risking $10. Let's just for simplicity, I'm risking $10 and I'm going to make uh at a ratio of 3, um I'm going to make $30 if the trade goes my way. Okay? This ratio, you always want it to be 2 to 1 or 3 to 1. So 2 or 3 or above. If you're using 3 and you decide, oh, I don't want to risk more than 2% per trade, then 2% is your risk, and you need a target of here for it to be 2 to 1. Okay? So you're going to take this trade, you're going to buy it here, you're going to put your stop loss here, and you're going to exit the trade right here. So you're risking 2% and your target is 4%. That means that you can place 2 trades losing 2%, that all you have to do is get one right and it'll make up and you'll tie essentially. So that's when people ask me, what where do I get out? It doesn't matter where you get out. You get out at a profit, right? You get out depending on your risk. If this was down here, right? If you had a 4% stop loss, or if you even put your stop loss, you know, all the way, down here, 10%, you better be expecting to make on this trade, 20%. If this doesn't look reasonable to you, then you don't take the trade. In this case, you could have actually argued, okay, my stop loss is here 2%. It's on an uptrend. I think, obviously, this is all speculation. I think that it's going to hit, the prior highs and keep rallying up, right? So then you would have had a profit risk reward ratio of 3.38, which is good, you know, but it has to hit this point. If it doesn't hit this point, then you can see that you went on and you lost. You lost on the trade. So that's why it's good for you to, when it's going up, keep in mind the 2 to 1 risk reward ratio, and as a minimum that you need to make, and you exit partially here, and then maybe you have, another target right there if it hits. You could even then, once you've exited partially here, you can even go and adjust your stop loss to here, and automatically it doesn't matter what the price does. It'll, you'll break even either way. But
What tool is that? The color.
I'm sorry, say that again.
What tool is that? The risk reward ratio.
Oh, it's just a long position and short position, right here.
Okay, okay. Okay, so you drag it and then it colors it in.
No, I just click it, and then I just drag, you know,
Okay, I got it.
line where your entry would be. And you put your stop loss wherever that would be, and your target wherever that would be. Um, and I'm gonna try to do this in real time in a little bit. Hold on. Let me flip through something here. I need to see what time it is. Make sure I'm on schedule. Okay. So I have time for one more question about this. That we talked about the triangles, and I think that's pretty straightforward, right? No more questions? Okay, so the next thing I want to talk about is a pattern. So now you have the triangles, right? And I can't paste it on here for you guys to see, but on a pin to the top and on the beginner's trading guide, you'll see all of the triangles that are pretty triangles and wedges and pennants and flags. It's just two or three, models that you need to memorize. And a good practice for this is for you to just, pull up any random chart and just try to find them. You know, just pull up anything and see what you see. So, just, start drawing lines. You know, it'll be very easy after a while for you to identify these patterns. Um, okay, so we're just starting an uptrend here. Here we're in a oops. Here we're in a downtrend, so we would be looking for patterns to exemplify continuation down. So boom, down. Uh, that one's kind of weird. You could have done this. Boom, down. Boom, down. Okay. So it's always good practice to to just grab onto any chart, any time frame. This is the daily, but you see, they're the same patterns over and over, right? If you had just traded these patterns, you would have gotten in, gotten in, gotten in, gotten in from 2019, all the way to 2020. You got 4 entries on TripAdvisor on the daily chart. Now, this is obviously the daily chart, right? So you're going to get a lot less entries. Um, and now, the same thing is happening on the upside. So you see, we got this pattern here, broke up. I mean, if you really, really wanted to force this, you could have done this and gotten in here. This would be kind of stretching it. This isn't really, this is a pullback, but it's not really a pattern. It's just a regular pullback, and you bought it the 50-day. Okay, let's do one more real quick, just for just because, you know, why not? Why not Bitcoin? Okay, one of you guys tell me. Someone pick a stock, any stock.
Tesla.
Tesla. Any time frame? What time?
I'll let you pick.
Sorry?
I'll let you pick that one.
Okay. Eeny, meeny, miny, mo, catch a tiger by his tail, boom. Okay. Tesla 30 minutes. Okay. We're going up, right? So 50 day is above the 200 day. Stretch this a little bit. Okay. We're looking for buy signals, right? Okay. Here, this one here is known as a double bottom. Okay. This is where it all started. Okay. A little flag, boom, up. Right? Another flag, boom, up. Okay, let's keep watching. Got another one here. Boom, up. You got a few bear flags here, but you're ignoring them because see, a little triangle there, drop. You're ignoring them because we're in an uptrend, right? Boom, up. I mean, you could have even argued this one here. This is another one we're going to talk about right after. Flat top. Boom, up. Bull triangle, up. Another double bottom here. Another double bottom. Really tiny, but it is what it is. So double bottom there, double bottom there. Here it's already inverting, okay? You're out of your trade. So if you were up to this point looking for buy signals, you got them. 1, 2, 3, 4, 5, 6, 7. If you were trading the double bottom, 8. And here, okay, trends changed. So you're no longer looking for buy signals and you might even be out. Had you traded Tesla from November 17th all the way till now, you would have gotten 1, 2, 3, 4, 5, 6, 7, 8. Okay, 8 possible trades in a little over 2 months, 3 months. So, one thing I notice about just traders in general is that they want to trade every day, right? After looking at this, does it make sense why not every day is good to trade? I mean, you got 8 clear entries here, right? All right, now let's play around with this a little bit more. Let me show you something even more interesting. You put a stop loss here. You put a stop loss there. You put a stop loss there. You put a stop loss there. You would have been stopped out of that position right here. You put a stop loss there. You put a stop loss there. You put a stop loss here. And you put a stop loss here. So, in the middle of 1, 2, 3, 4, 5, 6, 7, 8 trades, you only got stopped out once, and it's because, whatever this was, maybe he tweeted that Tesla's price was too high. I don't know. But you see how if you look for these patterns, the trade just automatically works. You don't get stopped out. You don't get worried. The thing
Yep.
is, you can't trade Tesla every day. You're not going to have good trade setups every day. And, sometimes it's a little frustrating for us. We want to give you guys, alerts every day. Um, but sometimes the market just doesn't set up for it. You see, we had 8 trades in 3 months on Tesla. If we were trading this pattern, obviously, and you don't, and this is Tesla. If you go and you pull up, I don't know, whatever you want to pull up, SOS is going to give you more of these triangles on different days, right? And you'll eventually fill up your whole schedule on something. You'll be able to trade something every day, but not every day is a good day to trade. And this is what we look for. We're not looking for we're looking for these 8 trades in whispers. We're not looking for, oh, maybe I can buy here and maybe scalp it for $1 or two, or, here, something like that. No, we want to alert you here, right? We want to alert you here. We want to alert you in these areas. Sometimes it works, sometimes it doesn't. I mean, this isn't a science, but the point being that sometimes the market just isn't good. Just sometimes the market it just not setting up correctly. Let's look at SPY here real quick. It's a great example. I mean, look at us here between literally February the 5th. We haven't moved. We're not doing anything. You remember when I was showing you before those buy signals and those sell signals, and we were all, losing? You would buy it and you would lose, you would sell it, you would lose. That's where we're in the market right now. We're in one of those periods where it's going sideways, and whatever the hell you do, you're going to lose. So we have to try to find in this market certain stocks that are moving. Okay. And this is kind of going to lead me into to the next um the next phase. Um so I'm going to grab on to our penny stocks. Okay. So that's a little bit of where penny stocks comes in. Um there's always something moving in that world. On Friday, it was VCNX. I'm going to take that as an example. All of the penny stocks were profitable to plays on, and they were alerted, prior to prior to uh, market open. So I remember that they were mentioned. We scanned them. They were mentioned somewhere, around here. Okay, so the next pattern I want to talk about is a bullish inside day. Actually, you know what? I'm going to talk about another one first. Um, someone mute their mic, please. Um, so the next pattern that I'm going to talk about is the one I don't know the name. And if any of you guys find it online somewhere, let me know. It'd be good to know. So the pattern is this. You want to look for okay, you want to look for red candles. Okay. And then you want to look for a green one. Now, oops. Okay, so you want to look for red candles, right? So a pullback area, and then you want to look for a green candle that doesn't break the low. The low of the green candle does not break this low, and the close of the candle is above this level. Okay, so let me show you an example here. Just let me see if I can find one. Okay, here. I'm sitting here drawing shit, and it's right here in front of me. Okay, so you see how this you get these red candles. This is pulling back here, right? Then you get this red candle and this green candle. It doesn't break the low, yet the close is above. Right? This here, that close is your buy point. Okay? Does this make sense? Why this one is not the same as this one? So this one here, you see, the low of this candle broke this low. Right? It closed above it, but the low broke the low. This one here, it did not break the low, it broke and it closed above the high. All right? So now we're looking at a 5-minute chart. Okay, this is pre-market. Let's go and look for, every time this happened. So, boom. 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 Okay, so we're trading on a 5-minute chart here, right? And this is a penny stock, so you really don't know what to expect. But I can just as well move this over to a 1-minute chart, which would probably have been better. We got points here, as you can see here. The when it broke down below the 50-day moving average, the trend was down. So you were not supposed to be taking any of these long trades here. Actually, it might even be better to trade this on the 1-minute chart, because this was one of the penny stocks that were moving. So if you were same strategy, okay, just on the 1-minute chart. Okay, 1-minute chart is kind of, I think, here. Okay. Oh, that was your entry. I guess you could have had another entry here on the break of this, candle here, or ridden it up. Okay, it doesn't matter. Wherever some people entered here at the open. Congrats if you did catch it. It was good for a pretty decent move from $5 all the way to 9. It's almost doubled. And you needed to take profits. Obviously, you could have taken profits in many ways. You could have taken profits here. You know, if it broke here this low of this candle here, okay, you could have taken profits there. You could have taken profits here on this reversal, because now we also have the opposite of the buy candle. You have the sell candle as well. So here, right? Here, if you were trading the 1 minute chart, and it doesn't matter what you're trading, okay? There's no right way to do time frames. So we alerted this VCNX, I don't know, somewhere around here. It was still in pre-market. But it doesn't matter if you were trading the 1 minute, the 2 minute, the 5 minute, you know, whatever it is you're trading, the patterns just keep repeating themselves. What you need to do is decide what time frame you're going to use to trade it. Okay. So if you got this buy signal here, then you could have purchased, you know, here. Amplify this a little bit. Okay. You got the buy signal here. Actually, it's kind of tight there. More of this one. Um, so in the first minute of trade, you got the buy signal. See, it didn't break down below the low of that candle and it closed above, right? So here, if you're trading the 1 minute, this would have automatically been your buy point. Okay, at 602. You could have put your stop loss here, right? But even if you waited for here, your stop loss would have still been here. The only difference is you would have gotten in, you know, later. Um, One tip that I see that is good is this can the closer that you get into the 50-day moving average, the better. Um, but so sorry guys, I'm keep typing in the chat, but I can't follow it and talk at the same time. um, so it where you enter is going to determine where your logical stop loss is, right? So if you had entered here, which would have been the accurate buy signal, you would have been able to put down $10,000 on this trade, right? And your stop loss would have been like 4%. So you would have, you know, lost $400 on a $10,000 trade because your entry was relatively safe. Or you could have put in $1,000 on this trade and only lost $40. I mean, it doesn't get easier than this, guys. If you enter the trade late, if you enter the trade here, your stop loss is going to be 17%. Then, if you put $1,000 in here, your loss is going to be bigger than if you had entered the trade here. So you always want to be sure to look for your entries, right? Because if you pinpoint your entry more accurately, then you'll be able to, bet more and lose less than just entering randomly. Um, and some people don't understand why it is that they're losing on positions. This is exactly why. It's because you entered right here and you were losing 11% before it actually moved your way. Not just that, but okay, you entered right there randomly again. You didn't bother to look and see, oh, wait, there's, maybe some sort of triangle here where I can wait for it to enter and enter, here on the break. Because here it opened above, didn't make a low, and it started breaking up. You could have entered here at $8 and put a stop loss here at 758. For a 5% stop loss. So if you entered here, up here, you had to hold through a 12% stop loss. And this here is about the time that you're selling because you're worried it's going to flip around. And it's because of your entry. It's not because of your thesis or because you have the direction wrong. It's because you entered it wrong. So for you to enter it right, you have to look for a safe entry. A safe entry is this. You see this, you see a triangle, you see a continuation pennant, and you wait for it to break out. Price will move in your direction. So if you got in here, or even if you waited for here, price still moved in your direction a good 12%. If you entered here, it moved in your direction 19%. So you always want to be, and then you got this sell signal here where, again, it didn't make a new high. It opened inside the candle and it closed outside. So this here would have been your sell signal, right? You would have sold right here from your long position or taken profits or whatever. And price still would have gone down a little bit and then reversed. And then you got a big, reversal here. And it ended up, just kind of moving down slowly all day. Broke down the 50, uh, ended up breaking down the 200, just kept going down. So that was the VCNX trade. Okay, let's go over another one. TAOP. Let's see what happened there. So this was alerted again. TAOP was alerted here in pre-market as well. Okay, so what's your job here? Let's look for entries, right? Okay, you were alerted somewhere around here. Let's see what we can find. This is kind of a weird chart because it's there's a lot of gaps in it, but okay, we're looking at it. We're seeing what we can find. Okay, so market opens up here. You got your first little buy signal here, just like I showed you, right? It opened within the candle, and you could have bought in here at this close. So you bought there, stop loss right there, below the low. That's your buy candle, okay? Okay, let's say you missed it on the first minute, right? You missed it. Now what? Okay, now you keep looking. Too bad. You missed it. Okay, now what? Oh, wait. Maybe I see a little triangle here, something that, looks like it. A little triangle. I might be stretching, but it looks like a little triangle. Okay. It broke out here. Here's my buy point. Okay. So you bought there. And again, I can't stress enough, nobody can tell you how high this is going to go. Nobody can tell you, where to sell. It's up to you to decide where to sell. So you got in there, you would have still been good for about a 9% profit, right? If you got in here, you're good for, you saw this, you fought through all this. Here you were up 24%. You fought through all this, you actually saw the triangle. You know, you still held it. You would have made 33%, or maybe even sold off around here, 14%. You know, either both trades were good. And as you can see, we have both of our tools right here. We have this candle. We have a continuation triangle. It's the same pattern in every, we have, you know, the 50-day over the 200-day. It's the same pattern in every, every trade. Let's see, what's the other one that was alerted? Load, L-O-D-E. L-O-D-E. Oh, another. I typically don't trade these stocks, um, just because I like to see candles. But in a 5 minute, you need to have a little bit more experience to see this. But yeah, so here you have a triangle, a continuation triangle. It's not a continuation triangle. It's more like a pennant. But yeah, see, on the 5 minute you can see it clearly, but on the 1 minute you kind of have to imagine it, right? So load, we alerted it also pre-market. Right here, you have a bullish on the 1 minute, on the 5 minute. So it's all the same. You have the triangle here. You're close to the 50-day, and it's trending up. That's your buy candle right there. That's your stop loss right there. How much are you risking? 3%, guys. How many of you guys lose $200 on an options play? Now, if you put $10,000 down right here and you risk 3%, and this is not financial advice, I'm not a financial advisor. If you even want to put it closer, 3% right there. If you put $10,000 down on a penny stock, is that okay? Yes, it's okay. You're only risking $300, right? If you lose, if it flips against you, you're only losing $300. Can I put $1,000 down? Yes. Is it because it's a penny stock that it's not going to work? No. You know, you're losing 2 or 3% of your investment, but you have to use stop losses. So $30. You put down $1,000 right here, your risk is $30. How much do you make? A maximum of 17%. So you're risking $30 and you would have made a maximum of $170 just with risking $30. Now I'm looking for a specific example here to show you when not to take the trade. Okay, so you see this candle here. This meets our criteria. It did not break below this one, and it closed above the high, right? This is our buy candle, okay? Now understand this. If this candle here was this candle, okay? If it was big like this one, do not take the trade. Even if the setup is perfect, do not take the trade. because your stop loss is going to be 7% away, right? Or six and some change away versus, you know, 1%. So if you see a big candle, do not take this trade because the logical stop loss is down here. It's too far away. So you're like, oh shoot, I was looking for something here specific, but okay, now you're like, okay, shit, well, I missed it. You know, those guys alerted me too late. Um, what do I do now? you know, I don't know what to do. Um, so let's go back to I don't think I looked at this one yet. TWO. Ah, this one was also um, alerted on oh, this one worked out pretty nice too. It's also one of those weird penny stocks. Um, but this isn't the one I was looking for. TAOP. I think it was VCNX. Okay, so um, this VCNX, when it was alerted, this stock was literally up 100%. Right. So we alerted this somewhere around here, and it was up 100%. And someone mentioned in the chat room at the time, you know, why didn't you alert down here at $3? You know, um, you're too late. It's already up 100%. You can't, you know, it's not allowed to go up 200%. It can only go up 100, right? So, not to bust anyone's chops, but you know, it something just because something's up 100% or 200%, it means absolutely nothing. It means that people are willing to buy it up that much. Um, Now, obviously, we have a pretty good crystal ball, but not this good. I mean, there's no way that we could. I guess we could have imagined it with the after hours activity, but there's no way that anyone is going to tell you, unless they're, you know, unless they're magicians, that this here is a good buy point. There's no way that someone can look at this and say, "Oh, hey, buy it right here because it's going to go to the moon." This is not a good buy point. This is a good sell point. You should be selling or being stopped out or whatever, you know. This wasn't an uptrend, yes, but nobody can tell you that, oh, the next day it's going to be up 300%. And our goal is not to buy it here. We have to be sure that there's an established trend. Um, we have to be sure that there's an established trend for us to try to get a move off that trend, right? So when we know now that, oh, okay, shit, this is going up, now is when we want to buy, when we know it's going up. Because here, for sure, it was already up, from the day before 116%. But, you know, I'm not looking to get that 116% because I had no idea this was going to happen. But I am able to buy it right here and catch another 60 with, with a lot more validity and reasons for this to actually be work out this way. Um, so that is that is for this candle. And another sample that I want to show you this is on Dogecoin. Just for the hell of it, let's take out the 50-day, right? So here we have Dogecoin on a 30-minute chart with a 200-day moving average. So above the 200-day moving average, we're bullish. Below, we're long-term, you know, we're long-term bearish or longer-term bearish. This is a 30-minute chart. So now what we're going to do is we're just going to go and we're going to look for buy signals when it's above the 200 moving average, and I think that is what it showed here. Let me just confirm it real quick. Let's just take this section here just to make it easy. Okay, so we see that Dogecoin is popping up here, right? We don't know what's going to, again, we don't know what's going to happen in the future, right? So this is all we see. Miss any, let me know.
Isn't there one right there, right above where your hand is? Right there.
I mean, I think it's like right at. You want it to be, above. And ideally, I mean, yes, I guess you could, if it's like one penny above, I guess you could take it. Um, but ideally, you want it to be on a pullback, right? Here, it's more like it's already trending up, so you're like chasing the move. But you can do it. You can do it by all means. Um, but you'd prefer it to be on a pullback. Does that make sense? Why?
Yeah, because it's a reversal.
Well, because you're getting it cheaper, right? If you're buying it on a pullback, you're going to be getting it cheaper. So you see here, we were up here, we started pulling back, right? And we went and got our buy signal here, right? Then you get another buy signal here. And obviously, I'm just using Dogecoin as an example. Um, but see here, another one there. But you see how these are better than these, just because they're cheaper. But I mean, you can use whichever ones you want. So if you use these that you're chasing up, then you run more risk of um, this happening, right? Of you being down a little bit than if you're buying it on the pullback. So I know that you see this, right? I see this. Then I see this. Then I see this. I don't see this. I'm trying to filter out the noise. Does that make sense? This up and down, this is just noise. We have a high and we have a low. We have a high and we have a low. Right? So if you're buying it here, you're already buying it kind of on a high or on a move up. If you're buying it down here, you're buying it more on a low. Obviously, you only know if this is the low, probably somewhere around here, when you start getting these other buy signals. So they're all kind of in the same, price. But let's keep going. Let's keep going. This is good practice just to do so that you see what happens so that you know what to expect in the future. And this is not what happens with Dogecoin. This is what happens with all of them, all of the stocks. It doesn't matter. These are all candles, they represent price. Ideally, you want to see the candle prior to be red. You want to see a red and a green. Okay, and I probably missed some. But here, just to look at the general panorama. How's that look? Decent? So clear buy signals. Okay, now here we go. Where do I put my stop loss? Below the candle. Below the swing low if you want, or even below that candle. So that's where you put your stop loss. Here. This might be way too low. You might put your stop loss there, where the candle was identified. And this is not telling you that you are not going to get stop. This is not telling you. This system is not telling you where to sell. We're just working on buys right now. Where to sell, remember, it's up to you. So, from here, you would have been up 20%. If you're okay with that, sell by all means. Because, nothing moves in a straight line. There are going to be pullbacks. And if you wait too long, you know, you will be stopped out. And that's okay because you're meant to be stopped out. Um, but at the same time, you want to be able to take some profits when you're up. So, okay, I'm just going to use this line for both of these stop losses. You still would have been stopped out here. Okay, this was a little sideways movement. Okay, now you got another one here. Another stop loss here. Boom. 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 So you see what it's doing? You aren't getting stopped out on any of these. It's just a gradual uptrend and you're buying on the pullbacks. But you're waiting for a specific candle to do that so that you have a rule of where you're going to put your stop loss. So you're going to enter here and you're going to enter here and you're going to put your stop loss right here. Your risk is defined, and that's what matters. Ricardo, yes. Sorry, I caught that question. Ryan, how can we apply this to options trading? It's the same. So it's the same. So, okay, let's give me a second here just so I can show you. YOLO. Let's see what we got here. INTC. Okay, so Friday, INTC, right? Okay, so Friday we got an alert in the YOLO channel for INTC, right? Let me see here. Check INTC at 9:20. So this was about 1 hour after this was alerted like right here on INTC. So is this right? Yeah. So INTC, we alerted this right here apparently, and I think it's right. What is this 8:30, 9:20? Yep. Oh shit, that was great timing. Okay, so we alerted this right here, right? So we gave you a contract, we gave you the alert. So now it's your job to find an entry. Now, it doesn't matter if you're looking at the 2 minute chart, the 1 minute chart, 15-minute chart. All of them are going to I flipped through through timings. So I flipped through time frames to see which one is working. So okay, 5 minute. Let's just say that I'm trying to pinpoint my entry on the 5 minute, and I have the 50-day above the 200-day. So we're in a clear uptrend. Okay, what do we notice here? So first thing we notice, triangle. Boom. We alerted like right here. So triangle, right? Then, and we're looking at the 5 minute. Okay, keep that in mind. 5 minute. So you could have entered the trade here, on the break of this high, or you could have used the pattern that we just talked about, right? But you run, this was the risk that I was talking about. You're waiting for here, so you're going to have a, well, it's not too big on Intel actually. You're going to have a 0.79% stop loss. So if you were using that pattern that we were just talking about, right? So this candle opened inside this candle and it closed outside of it and it didn't break the new low, then you would have gotten in, let's say stocks. If you're purchasing stock, you're looking for a 2-to-1 risk reward ratio. At least, oops. 2-to-1 risk reward ratio. So you're technically still in the trade, right? You would have bought here, you're risking 0.74. Your profit is the double, 1.47. You're technically still in this trade until Monday, with a stop loss down here at 61.94. But let's keep going. So you got this alert, right? Okay, now you're looking for your entry. Okay, entry 1. Then you have entry 2 right there. Right? Make sense? Oh. Okay, but now you need to understand that here is where you need to understand that this option here costs 1.45, and if you buy it here, it's going to be more expensive. Okay, so what are you waiting for now? Oh, I want to wait for a pullback. Okay, so it's still going up. So, right, you get this continuation triangle, it goes up, flag, it goes up, and now all of a sudden it stopped going up, and now it's going down, right? So a pullback is happening here. So now you're looking for your entry on this pullback. And boom, entry there, stop loss there. So you enter the options trade here and you exit the options trade here should the stock break below. So you're going to exit the options trade if it goes against you when the stock breaks below the this amount, not when the option breaks below a certain amount. I mean, then you could have entered here also. Boom, enter there. Then it moved up, you know. So you could have used these techniques to enter this trade, you know, at any one of these points. 1, 2, 3, 4. Obviously, you'd get it at a higher price. I'm not sure at what price the option was trading here, but it, you know, the best price in this case was to enter at the alert, was to be pulling up this chart and seeing this pattern and entering on this break. I know that up here it was up about 25%, I think. I don't recall. Um, okay, so okay. Questions. Voice questions. Anyone?
Right, yeah, just that last example that you've got on that pullback in the middle, there is a buy signal on the fourth dip that I see that you haven't highlighted. So just it's about 11 candles to the left of that green in the middle of it. That one there.
Oh, sorry.
Why is that not a buy signal? I can obviously see that it would have been a failed trade.
It is.
But I read that as a buy.
Sorry. Yeah, it is. Ideally you want to see a, in my experience, when it's a red candle before the green, it works out better. This obviously would have been a failed signal. But again, they don't all work out, right? So as you can see here, this is the same scenario that you have here. This one worked and that one didn't. I in my experience, when you have a red candle before the green one, it just works out better. Here it's like 50-50. Now, that doesn't mean anything. That doesn't mean that you shouldn't take these trades. It just means that you're running a higher risk of being stopped out. And then, you know, other things come into play, like this was pulling back to the 50-day moving average. So it's a little obvious that it would eventually, you know, sometime here in the future come down and test this 50-day. Does that make sense?
Yeah, it does. I'm seeing, because it's on a bit of a pullback there, that's
Yeah.
also more dangerous, having it on that double green. Yes, it's a buy signal, but because it's on that downward trend, maybe it's better to wait for that red first.
Right. I mean, here, not just that, but here you also kind of have a double bottom. You see it? Are you familiar with technical patterns?
I think we're all learning here, but
Okay, so a double bottom.
I know a few. I know a few, but not that. But
Okay,
I
so
can-
a double bottom is just it's a W, right? So it's this is all it is. Where you have one bottom here, you have another bottom there, and when it breaks up, it continues up. And this is what we call a double bottom. So this is you'll see a lot of these um, double bottoms, and this is this is sort of a double bottom because the market isn't really exact. Um, but this low here is not supposed to be lower than this one. That's why it's called a double bottom. But I guess you could consider, that this isn't an exact science, but this could be a reversal here at this point. So you have, you know, it's pulling back. It's on a bullish trend. It's pulling back. You get this double bottom here with this buy signal, and you're at the 50-day. So this was a pretty nice, entry here when you put all of those things together. Um, but I'm not even gonna, I mean, really talk about the double bottom for lack of time. I think that just showing these simple patterns is going to help you a lot more. But let's delete all of this and just do this here. You're never going to uh, this is not you're never going to be able to um, consistently catch the exact bottom. If that's what the idea is, um, it's not going to work. Um, you only know that this here was the exact and ultimate bottom when it's already up here, right? Till then, this here could have been the exact bottom. This here could have been the exact bottom. You know, you're never going to be able to do it consistently. That's all I'm saying. So you need to mitigate your risk. So that means that if you had entered the trade here or here because you thought that it was going to go up, then you need to put a stop loss right below it, which is where your reason for getting in um, becomes invalidated, right? So in this case, you're losing 0.22%, which is probably irrelevant. Here, pretty much the same, 0.22, 0.30, somewhere around there. So you're down 0.50 now, right? Then you're taking this one, um, same stop loss, but all of a sudden, you could have been up 1% and you lost. You lost this because you lost it, whatever, for whatever reason. But just taking the trades in the right direction, you'll get it right more than you get it wrong. And no one is telling you that this trade is right. What you're doing here at these points, uh, okay, maybe not this one, but yeah, let's just circle it just because. What you're doing here at these points is just trying to get in at a lower price. You could have even very easily just came here and drawn a line and said, okay, so I got this buy point and now it broke out of that line. Okay, now I'm going to take my entry. So this is where I'm going to take my entry. You just need to decide what's more comfortable for you. So all of these are just tools, right? They're just tools to be able to trade. And once you get comfortable identifying them in real time, then go ahead. Once you get comfortable identifying them in real time, then you know actually once you get more comfortable identifying them with when everything is not moving, then everything becomes much easier to identify in real time. So it's always good homework to go back on charts and just place the arrows where they should be. Um, but you can use this to enter or exit the trade on on options or on stock or whatever it is you want to do. If you're bullish on this, and we called out this option, I think this had January, February, March, April, an April expiration, right? So obviously we're not expecting this to be over today. And we called out the 67.50 strike price. So we're expecting it to go, closer to 67.50. Um, so it doesn't really matter if you buy it here or if you buy it here. It's going to be irrelevant. You might even buy some here and then buy some more down here. Scale in your entries. So you could buy some here. Okay, you missed this entry, right? You got the second one, but you're like, oh no, it's gonna pull back a little bit more. Okay, so here you buy some, right? Then you buy a little bit more here, then you buy a little bit more here, and you just kind of average out your position instead of buying it all at once. That's also, depending on whoever it is, just whatever you're more comfortable with. Okay, guys, I have like time for one more question. And, if I don't answer all the questions, you guys are free to join the next one that's in like 1 hour, but I still want to go through one more pattern. So, any questions? Questions?
Just want to say thank you for taking the time out of your day
Oh,
to share this with us.
no problem, no problem. Thanks for being here. Appreciate all you guys being here.
Yep. Thanks, Mythos.
Okay, so the next pattern I want to talk about. Next pattern I want to talk about is an inside day break. I'm going to try to find one. So essentially, what this candle is you have a green candle, right? Green stick. Then you have the 50% mark of this candle, right? 50%. Okay, then you get one or two small candles right here. It's not two small candles, it's one or two small candles that do not break below this $50 range, this 50% range of this mother candle. And then you get another candle that breaks up. So this here is your entry point when it breaks up above this mother candle. Or, and your stop loss is right here below. So this here is your stop loss. And your entry is above this candle. Right? So that's where you enter. Cool. This is again also a defined strategy where this is what's going to take you into the trade, and your stop loss is going to be relatively close to your entry so that you don't risk a lot. Okay, so now let's go and can someone pick a stock, please?
On that one, real quick, do you not wait for the candle to close? Do you just go ahead and enter it and just set the stop loss?
Yeah, you enter at the break because so you enter at the break of the mother candle. So this mother candle has a high, and you want to get in as soon as possible because this candle that's forming here, you don't know where it's going to close. It might just straight shoot up, right? And then if you wait for it to close, well shit, you're too late and your stop loss is now further away.
Gotcha.
Right? Okay, so anyone pick a stock?
How about Lake Resources?
I'm sorry?
Lake Resources.
What's the ticker?
It's LLKKF.
Oh,
Thank you.
they changed their ticker? I thought these guys were like Lake or something. Or is that something else? Sorry, say that again. LLKF.
LLKKF. That's the one.
Okay, this isn't the best stock to to pick, but I'm gonna try to find something here for you. So all right, let me just look at this one first. I'll probably try SOS next if I can't find one.
Thank you.
So this is the daily chart. But nobody, but these candle patterns, they show up on every time frame. You just have to be ready, when you see it. Um, okay, so I'm going to. This is on an uptrend, right? We're above the 50, above the 200. It's on an uptrend. So now we have, uh, and you probably wouldn't take this trade because it's the downside, but you have that scenario here. And I mean, I don't like this, but you could argue it. Okay. So you could argue this because it actually did break up, but I wouldn't have taken it because I want to see one or two candles. I don't want three. I want one or two. Because if I see three, it's something else. It's not this pattern. It's more like a flat top breakout. Okay? So if I reduce this to a 1 hour chart, this is more like a flat top breakout than what we were talking about. But okay, let's go here to the daily. So you got to do some math here, some mental math, or just visualize it. But or you can use this tool. Okay. So this is the 50% mark of this candle, right? You got this one candle here, which is you want it to be, you want this low here, that low. This candle can't be lower than this one. It has to be the same or shorter. Okay. Then the high of this candle cannot go above the 50% mark. You can go below it, but not above it. And then here is where you would have taken the long position, right? Where it broke out here. Now, you're on an uptrend, so in reality, you're trading the counter trend, so you're not sure how well this is going to work out. But it was still good for a maximum of 20%. Okay, on the downside. Let me try to find something on a different time frame. Okay, here's an example of where it did not work. Oh, wait, no. It's bigger. Sorry. Okay, here's an example of where it worked. Obviously, you would have been late to the ball game, so it's kind of up to you if you want to take the trade or not. So, as you can see here, we have this candle, we have a little inside, and then it broke out. Yes, all the way up here. You could have taken this up, but you also would have been down. Your stop loss would have been pretty far away. So you need to, okay, here's a good example of where it didn't work. So here, okay, you have these two candles, right? It didn't break down below the 50. And your candle, your third candle tried to break out, but it couldn't do it. Okay. Your stop loss is still down here below the 50. Or you can even put it here. So on this trade, you would have lost, 7%. Trying to find an easier ticker. Let me do SOS. And you need to run. See here, it did it again. I'm trying to find one that worked in a without it being. Here you go. This is a continuation pattern. Here, probably. Oh nope. See, okay. So this here, this is not the pattern. You see how it broke below the 50? It broke down too low. This is not what it would have worked out well, but for another reason, not this pattern. I know I found a bunch of these patterns the other day. It's probably easier if I reduce this. Hold on. Probably easier if I reduce this to a 5-minute. Okay, so here we go. Okay, so, and I'm not arguing if these work out well or not. Okay, that one seems like it broke up a little bit too much. I'm looking at these weird stocks. Let me find something decent. This is a continuation pattern. So you're going to find it after the trend has already started. Okay, this is not something that you would find, for example, at the bottom, at a bottom. This is something you'd find like more up here in the middle, where the trend has already started. I gotta reduce this to at least a 1 hour to be able to find something. This one might be. Much. Oh, you know what? Where I'm gonna find this? Okay. Why is it that I can't find it when I want it? Okay, here we go. Damn it, found one. So You see, this one here abided by the condition. You would have purchased here on the breakout above, and it would have continued. Let me see if I can find something here better to look at. And this is all relative to what time frame you are trading on. Here we go. So you see, this is like a continuation pattern. We have this little flag. It broke out here. You got that little inside bar. Boom, you had the breakout. This is what you're looking for. Same thing here. These two candles. Third one tried to break out. It didn't quite break out, but it triggered your trade. I think. So it triggered your trade by a little bit. Maybe you got in, maybe you didn't. But if you had bought right at the break, it might have triggered. And your stop loss was not hit. That's what's important. It's below either one candle or two candles is where your stop loss is. It didn't hit. And this is also something that you want to use when you're trading, for example, those penny stocks or any other stock. This is another tool that you have in your toolbox as something to look for with the defined, entry strategy. Like right here. See? Boom, that's your entry candle. Your stop loss is right there. Right? So you would have ridden this up, I don't know to when, but this is obviously a 5-minute chart, so it's going to keep you in the trades much less time. Okay, let's go back to okay, so boom, 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 boom. No. Okay, now I know we're talking about we've been talking mostly about buying, but now look here at the reversals on the see, it didn't break a new high, and it came down and closed below a low. Same thing, here. Same thing here. Notice we're below the 50-day moving average, so we're trending down. That means that if you're taking the short side of the trade, you're entering here, 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 and you're never getting stopped out because the trend is down. Okay, where am I going to find this? Okay, what's moving? Is it Bitcoin? Okay, let's do some live trading here real quick. I'm going to put it on the 5-second chart just for simplicity so I can get some candles here. And I don't know how well this is going to work. I don't trade the 5-second chart. But boom, we're up. So you would have bought in here. You would have bought in there, right? And now I'm just going to try to find a way for us. See, there you go. You see that? There's a continuation pattern. It's on the break of that high. You see it? Real slow, real tiny 2 candles there. It didn't break down below the 50. And it broke up here. So that was your entry point. Now we're trading on a 5-second chart. Each candle is 5 seconds. That means I'm going to get stopped out a lot. This is worse than the 1 minute. This is like 10 times the 1 minute chart. Okay, so boom. Now we got a sell signal. But careful because we're still in an uptrend. Okay, I'm just pointing out the signal. See how it didn't work? Because we sold it on an uptrend. But that now we got a buy signal here. Okay, that candle that opened within and it closed above, here's our buy candle and here's our stop. This is just to kind of show that it doesn't matter what time frame you're trading on. You just need to memorize a few triangles and a few candlestick patterns and you'll do fine. So this one you wouldn't have taken it because we're on an uptrend, right? So you're looking for the buy signals. Okay. This one here was that candle we just talked about, right? You got in right here, right? You got in right here, and your stop loss is down here. So it came back down, did a little pullback, and now we're moving back up. And this is just pure price action trading. It's not, no indicators, no RSIs, no MACDs, nothing. This is just price action. Price is king. We're just looking at patterns. We're just looking at triangle patterns. And we're looking at two candlestick patterns. One that's a continuation and one that's a buy signal. Actually, they're both buy signals. Okay, so if you wanted to take a long position here, you know, a 2-to-1 ratio, just like we talked about. So you'd be risking 1/5%, and 2-to-1 is about right there. Now this doesn't mean it's going to hit this level and it's going to be over. It just means that it can still rally up, right? It can still keep going. This would be a take profit level if you're a trader that's trying to trade, something defined with a defined risk and defined profit. We're still in the trade, right? We got in the trade right here. Well, I don't know if we're going to be stopped out of this. This is a 5-second chart, so it's not too reliable. Okay, looks like we're doing a pattern here. Okay, start uniting lines. Start making lines. A little up channel, which will probably break to the top. Okay, while this is going, any questions?
On that middle bicycle, what?
Your connection is very bad. I can't hear you. Any questions? It was this buy candle here that we just talked about. So it opened within the small candle and it closed above it. So we entered the trade right here. This, I don't know.
Yeah.
Sorry, it might not have been. It might have just been a miss. Okay, so we just hit our target. See, so we got in the trade here. We put a stop loss. It's defined. We're not changing that, and we just hit our target, a 2-to-1 ratio, and we're out of the trade. We made 0.11. We risked half. Okay, now we can lose two, and now we can lose two trades, and we'll still tie. Okay, so this trade is now over. We're still in an uptrend, but this trade is over. Our job now is to find the next one, to find the next trade, right? So we're still watching it right now. You know, still looking for Ooh, this is starting to look like very low volume. Damn, even on Bitcoin. Is anything else moving? um, okay, so something happened here. It's probably the end of the hour. Um, but maybe we get something. Okay, boom. See? A little continuation buy here. So we're back in the trade now. We're back in the trade. Okay, my target just hit. That was fast. We're back in the trade, right? With a 0.01 stop loss, a little continuation pattern, right? Right here. That's when we got in. 2-to-1 ratio. Boom. See how easy it is? Okay, now we got another continuation here. We're in the trade. Stop loss at below 50%. Okay, boom. My target just hit again. So obviously this is irrational because I'm doing this on a 5-second target hit again and my stop loss did not hit. This is irrational because I'm doing this on a 5-second chart, but it doesn't matter what time frame you do it on. It's just going to be slower. So if you find this on a 1-hour chart or a 30-minute chart, it's going to be much slower than if you find it on a on a uh, on a 5-second chart, obviously, because you know you get 12 candles per minute. Okay, so all right. Okay, now we're out of those trades. We got those right too. So we're like 3 for 3 or 4 for 4 right now. Now this is obviously scalping, you know, on a 5-second chart. This would be this is impossible for you to do manually. You don't have the speed to do it. You can do it manually, but you need some softwares to help you out called DOS Trader. But anyway, you're out of all the trades at this moment, and you're still just watching it and seeing what's going on. Okay, guys. So here's where we're at. Say what? Is anyone there?
Yep.
I'm here.
Have you guys been seeing my screen?
Yeah.
Yes.
Oh wow, I wonder what happened there. Seemed like I had a glitch. Flo, go ahead, say something.
How's it going?
No, I mean Flo.
Hello.
No, I'm just,
Raising your hand
I'm just
like this
saying
is a
I'm here.
classroom or something.
Yeah, I'm just saying I'm here.
Say that again.
I was just saying I'm here.
Oh, okay. All right. Um, so okay, and this here kind of crashed now. We didn't find any entry points, but you know we're still watching this. To see if we can find another entry point, and all we're doing is looking for, you know, something that we just learned. We're looking for a continuation pattern. We're looking for a triangle, or we're looking for a, you know, inside candle break, or if, or we're looking for see here, here it did the inside candle break on the downside. Um, so 50% in 2-to-1 ratio, target hit already. Um, Now, if any of you guys want to, you know, do some homework and try to find some of these on a stock chart, feel free to send them to me in private, and I'll kind of look over it and see if everything looks all right, to kind of help you guys out. I have time for one or two more questions. The next session is supposed to start in like 15 minutes, I think. Um,
So both of those candlestick patterns.
Hey, I'm sorry, guys. Are you guys seeing my screen right now?
Yeah, it's paused.
Ah, okay, gotcha. All right, give me a second. Okay, so we have like 10 minutes, um, till the next session. So feel free to shoot out any questions, and if I don't have time to answer them, it's because I had to go to the bathroom before the sessions. Because I've been here for 3 hours. So go ahead.
I've got a question, please. Obviously, like you're showing here with the scalping and all that kind of thing, it would take sort of quite a quick broker, wouldn't it, with tight spreads to take advantage of those? Um, do you know of any brokers that offer that service?
Um, I mean, I wouldn't recommend doing this unless you're like really comfortable.
Yeah,
There are some you could do this with an integration between DOS Trader and Interactive Brokers. DOS Trader is just is it's just it's like a middleman between you and your broker, and it allows
yeah,
you to configure hotkeys on your computer, where you can do like Control S, and it automatically just buys, you know, 10 shares of whatever you're trading, or and then Control D will sell. Not even Control. I mean, you can program it to, you type 1, it buys 10. Type 2, it sells 10. Um, it's pretty advanced. It's called DAS Trader, DAS Trader.
brilliant.
And there's a subscription service to it. But you don't need to trade this on the 5 second chart, right? I mean, not many brokers even offer 5 seconds. Typically the least you can get is like 1 minute. I was just using the 5 second here to prove a point, to be able to show you like in real time how all of this works together. Um, if you don't, you know, if you don't have access to all of that, you know, you can use a 1 minute chart, a 5 minute chart, a 1 hour chart. You can use a daily chart if you want. There's no real um, there's no real rule to that. It shows up on every time frame.
Thank you.
No problem, no problem. Anyone else? Questions? Questions? Fast.
So both of those candlestick patterns, you don't wait. You don't have to wait for the candlestick to close. You can just take it as soon as it breaks and set your stop loss. Correct?
I would recommend wait the one that opens in the middle and then closes above. I'd recommend you to let it close. The other one, which is the continuation, you can take it on the break. But I mean, look at Bitcoin over the weekend on a 1 minute chart and just track it. Just watch it, right? You're gonna see these patterns over and over and over. Um, and just kind of see what happens, so that you know what to expect in a real-time environment. What would happen if I took it? What would happen if you know if I waited for the candle to close? um, where would my stop loss be? Where would my take profit be? Where would I sell? What I see, a big mistake that I see a lot of people doing is they want to enter a trade on the 1 minute chart, but then they want to hold it for days and days and days, and they want to expect that entry on the 1 minute chart was perfect. Um, no, I mean, if you're trading on the 1 minute chart, you got to stay on the 1 minute chart. If you're trading on the hour chart, you got to stay on the 1 hour chart. Um, Now, if you what you do is you go to a daily chart, and if you want to pinpoint your entry a lot better, then you would reduce the time frame. But you can't expect to look all day at the 1 minute chart and not look at all at the global picture on a higher time frame. Does that make sense?
Yes, good info.
Cool. So, any more questions? Any more questions? More questions? Okay, no more questions. So I'm going to end this meeting, and I'm going to be starting up another one which is just going over the same thing again in about 10-15 minutes. Um,
Thank you for doing this, Mythos.
no
Yeah,
problem.
thank you.
If you guys wanna
Me
wanna
too.
I recorded this, so if you guys wanna watch this later, you're free to. Um, I'll be uploading it to YouTube. So it's always on there as a resource. Um, if you also want to be in the channel, the next one, I'm thinking that there will be less people. So I'll probably try to zip through this a little faster. And if you guys want to ask questions on live or on chat, it'll probably be um, good and easier. So thank you guys for being here. Thank you guys for being a part of Whispers. Appreciate you all. Anything that you guys need, you can always free to reach out to any of the mods or admins. They'll take care of you. Reach out to me if there's anything very specific. Um, so yeah, I hope you guys enjoyed. Practice this over the weekend on Bitcoin charts. 1 minute chart. Just look at the 1 minute chart and see what would happen if if you took the trades. See what would happen. You know, place some fictitious stop losses on the 1 minute chart, and just wait for these patterns to appear. Um, and and that's it. Then come Monday, you just do it all over again. Um, and that's it. Hey Sean, yeah, I'm recording this, so I'll be uploading it to YouTube. Okay, appreciate you guys being here. Anything you need, let me know. I'll be opening up another room in a few minutes. All right, see you guys there.
Great. Cheers, mate. Thank you.
No problem. Bye bye.